Alrighty, welcome to Chapter 7, the last chapter of this course. I can't believe we've made it all the way. It has taken a lot of time to get through all of those transactions, but we're finally here at the end. And at this point, I would say you could start applying for admin assistant jobs. If you're somebody that's, looking at trying to pick up bookkeeping as a career, you can start to look for admin bookkeeping jobs. You have the core basics of how to do bookkeeping, and you can be confident that if you walk in and you start doing categorizations on transactions and you understand a client's chart of accounts, whether that's mapping it out for yourself, whether however you need to do it, you have the core skills to be able to jump into QuickBooks and start doing bookkeeping. We learned how to categorize bank feed transactions simply into one category, and we also learned how to split transactions, which are those Chase loan payments that we did. We set up the entire chart of accounts before we began. So that was a really good exercise in being able to just create accounts if somebody asks you to do so, or if you're setting up your new accounts as a business owner. You can understand how your transactions flow into the balance sheet and profit and loss. Maybe not at 100%. You don't understand the entire theory, but you do know where your transactions end up if you're picking a certain type of account. You've reconciled every single month of the bank account, so you know how to reconcile account, you know how to look at how to reconcile. Now, fixing reconciliation problems, again, I think that's more of an advanced thing, but you can always ask in the community if you have questions. Understanding journal entries, you understand how to do them, how to create them, how to save them, and how to look at where they impact your your total report lines. So that is a core of understanding them. And the core of debit credits, I know I didn't necessarily completely under explain it, but we will get into that in a future course where it is more and more important to really understand what the debits and credits really represent. So what's next? We're going to be looking at accounts payable and receivable in the next course where we're invoicing sales. We can do matching, three-way matching with accounts payable, accounts receivable. We can do a lot of different things as well between all of the different receivable terms, putting in discounts and all of that jazz. Notes payables and receivables, where a good amount of journal entries could come into play, where you have two different companies with the same owner and they kind of pay for different things for each other. So we need to be able to, you know, account for transactions that necessarily aren't moving cash, but are the responsibility of another business. We'll go over things like payroll and other advanced functions that we can do and a lot of other stuff. So just to kind of wrap up before we go on to the next bonus, which is exporting these reports to Excel or Google Sheets, which is what we'll be using, and kind of deducing some information from it. I just want to say if you got through this whole course, I really appreciate you taking this course. Please give me as much feedback as you can, even if it's chapter by chapter or video by video. This is what I liked. I think you really went too fast here. I think you didn't explain this too well. Please explain it. That'll give me the opportunity to make this course even better and upload revised versions of that so that people can learn and do better. I was a tutor before, so I really like to see people go from zero to hero when it comes to looking at something and being super overwhelmed and then feeling like they really understand it at the end of it. And so I'd love to hear your feedback. Please give me that in the community. It would be amazing. Thank you for taking this course. And if you do look at the next video, I hope you watch it and get a little bit excited because the next video is kind of what I really think financial services, like having a job in financial services or understanding financial statements, how it can be kind of fun and how we can use that to, figure out what our next moves might be. Alrighty. Thank you so much, and I'll see you in the next video, or I'll see you in the next course. Alrighty. Bonus section, we're going to do some quick, I don't want to spend a lot of time on this. And again, if you really want to learn, the community is there. Your subscription that you're paying for this course includes being able to ask ad hoc questions. I'm not going to be sitting there and doing a bunch of work for you, but I can definitely help you understand how to do a lot of different things, right? So let us go to the balance sheet. And for now, actually, let's just leave the balance sheet alone. I'm just going to do the profit and loss because I want to keep this simple. And I think if we go into balance sheet, we're going to be thinking about cash flow, and that ties to the third financial statement, which is statement of cash flows. Let's just stick to the profit and loss and kind of being able to deduce information from this. So you'll see that there's always a total line here, and you can adjust your settings to not have the total line and only have months, but the total is really going to help us here. I'm going to switch this back to months, run my report, then I'm going to export to Excel. And then once you have your Excel file, what we can do here is go to our drive, and we can drag this into our drive, hopefully. Yep. So we can upload this Excel file to the drive. If we hit refresh, we'll see our Excel file. Open this up. The other way to do this is to actually go through and open up a new sheet, click File, Import, and then you can upload your file here, and that'll make it to where you won't have this little Microsoft Excel format. But for the purpose of this, it's not too important what format you have it in, so I'm just going to leave it. In this, you'll see your entire profit and loss in an Excel format, which makes this really handy, right? So one thing I really like to do is you can look at these lines, and again, you would need to know a little bit of Excel to understand what I'm doing here and how the formulas are driven. But let's say I want to understand what my margin is per cup of coffee sold. I want to learn how profitable my per cup of coffee is before I pay rent, before I pay staff, because this is important, especially when you're in a volume-based business, where if your gross profit margins aren't high enough to begin with, then no matter how low you get all of your expenses, there's no way you're going to be profitable, right? So sometimes as a business owner, you really have to think about what you're charging to ensure that your margin makes sense, right? You can think about it backwards. And so let's kind of go through that. Uh, let's go through that. We have total cost of goods sold. I'm just going to highlight these real quick just to make it a little bit easier for us to see what each of these are. We can do some stuff like also where we freeze this, where we select that column, go to freeze one column. It doesn't want to freeze a merge cell, which is totally fine. I'll leave that for now. And then what I want to do is I want to highlight net income. And then another really good one to highlight is going to be payroll wages paid. And this is payroll wages only for an owner. So let's say this also includes some employees, then we would want to do a couple of calculations to back out the owner and, back out the owner payments so we can see exactly what the owner payments look like. But these are kind of the ones that I really like to see. This one's another bonus one that I think is really nice, and we'll kind of go over how to calculate that as well. But what I want to calculate is gross margin, right? So gross profit margin. And how I'm going to calculate that is I'm going to calculate it. Well, I can show you how this is done. Formula for gross profit margin. If you don't know this, and I think this is really valuable for, if you're a business owner, this will really help you understand how gross margin is really calculated as a percent. So it's revenue, which is your income minus cost of goods sold divided by revenue. So we can go in here and let's just do totals, right? For now, we're going to do totals. We're going to say revenue, and let's match the formula that we saw in Google, right? Which is revenue minus COGS. So in a parentheses, revenue minus cost of goods sold divided by revenue again, right? And then what we can do is we can make this a percent. We can increase some decimal points. Oh, that's too many decimal points. So we can see that our gross profit margin is 71% right now. Let's say we really wanted to aim for an 80% gross margin. We can do the reverse calculation, right? So if the formula here is the percent that we're calculating for is revenue minus cost of goods sold over revenue, and let's say our revenue is just too low and we're trying to find what our target is. So our cost of goods sold is this, but let's say our revenue is like 50,000, right? We're barely breaking even on just the cost of it. And I need to figure out how I need to price it. So let's work backwards to that number. which is 80% is, we're going to say equals, and the original was revenue minus, and this is where maybe we need to do some algebra, right? So we can pull up a little thing and do a little bit of algebra. And this is typically kind of the furthest it goes in terms of how much math we're going to be doing in general. But we have revenue and financials, usually anything that's negative is in parentheses. And then this equals our percent. And this looks really bad. And it's because I'm not putting it on paper. I would look a lot better if it was on paper. So obviously, if we were to do, if we were to solve for revenue here, right? We would want to do revenue times your percent. And then we're trying to separate revenue by itself. So then revenue, so this is revenue times percent. And then revenue minus revenue, but that is a positive number. So we're going to move this here because this will become positive after we move it to the other side of the equals. I really apologize for this. I hope someday I decide to get an iPad and really be able to draw this out for you. So this is revenue minus percent revenue, and this is percent times revenue, really, right? And so then if we pull this all out, what we'll get is revenue times 1 minus the percent equals cost of goods sold. So then to solve for revenue, it's cost of goods sold divided by 1 minus your percentage, right? So this is the formula we're going to end up at, which is we want to do cost of goods sold divided by 1 minus your percent. So we're going to do equals cost of goods sold divided by 1 minus your percentage that you've picked here. And you'll get that if you're aiming for a 80% margin, you would want sales of $231,919, and that would land you at an 80% margin. Now, let's say we set this back, our calculation should land us right at the exact number, right? So what we did here is we made it equal to this cell. So this cell is equal to this cell. And we can see that our calculation actually works. So this is another reason I like putting your different variables into different cells, is because you can manipulate them. And you can see, okay, if I had a 60% margin goal, I beat my margin goal by almost 10%. And 10% translates into almost 50,000, excuse me, translates into almost $50,000 worth of top line revenue with that type of margin. So this is a really good, if you're a business owner, there's good ways to kind of track to see if you're meeting what you want and what you would have to get to if you wanted to maintain your current cost of goods sold, but really achieve a better margin on what you're selling. So that's kind of the first one. The second one I really like to do is advertising, because let's say advertising brings in new customers, and let's say these are all brand new customers. And how would that really play into? I know in this situation, most cafes will have a lot of repeat regular customers, but let's say you're an auto detailing company where in the auto detailing space, you're usually servicing a customer once every year, or once every 6 months, maybe. But like if you do a 5-year ceramic coat, theoretically, if they go through a different car wash just to get it washed basic, you would only be seeing them once every 3 to 5 years whenever they need a ceramic coat update or whenever they buy their next new car, right? So this calculation is really good to see what your return on investment is for advertisement. So let's go back here and let's look up formula for return on investment, which is ROI. ROI is net income divided by total cost times 100, right? ROI is net income divided by total cost times 100. And this times 100 is just to, you know, create the, to help create the percentage part. But here it's saying net income, but I want to see kind of what the investment return specifically on advertising is, because I'm assuming that in this scenario where These are all brand new customers every single time. They never return. It's always a new customer. This is responsible for generating this, right? So I want to calculate your net income divided by total cost. This divided by this. 78 times return on investment. And what that really looks like is if we add in that times 100, looks like you had a 7,800 times return on your advertisement, right? And this is kind of unrealistic because if you were an auto detailing shop, you'd probably spending near 2,000 to 5,000 a month to bring in leads that are bringing you a lot more revenue on the top line, right? But then you'd have a lot more labor expense. There's a lot of other things. And this is what gets really interesting about all of these um, different types of businesses and why I think bookkeeping is really nice. So one of the things I wanted to review here, right, was remember we had distributions of $8,000. So we can say total take-home pay for the owner was 8,000 plus the 65. And so total take-home pay between these 11 months, or not 11 months, sorry, 13 months, 14 months, sorry, the count is showing me 14, but only took home pay for 13 months, would be $73,000 is what they took home. But how does this affect the way a business is valued, right? So to an owner, they were able to take home that $73,000. To someone that's looking at buying this business, right? What they would see is that if they weren't running the cafe themselves, they would have to pay somebody $5,000 a month to work there. So right now, your net profit over this year is $20,000. But to a buyer, sorry, over this year to you as an owner, your profit is 73,000. But to an owner that's not willing to sit there and work, that profit is really only worth 20,000 a year. So this kind of shifts your perspective as well, because what an owner would theoretically like to do is to replace somebody at maybe 60 to 70% of the cost they have, right? So let's say they put them right at like 3,000 a month. If they were able to do that, then, that number changes significantly to how much it really costs to run this. And then the business is profiting almost double because you were able to find cheaper labor to put in place of you. So, okay, so the last metric we can calculate is just what is our net income to our gross revenue. So what do we end up with after we collect 160,000 and we end up with 20,000? What is our margin on net profit? So what is like the distributable cash is almost what you can think of it as. It's almost 12% on your top line. So these are some like very basic but nice little metrics to see, and these can help whether it comes to just understanding your business model. There's a lot more other um, things that you can calculate. For example, let's say you feel like you're paying way too much in bank and processing fees. Very standard wise, 2 to 3% processing fees is very standard. So let's see what our percentage of collecting all of this was, and it was very low. It was less than a tenth of a percent. So I would say this is a big win. If your payment processor is a fixed rate and you're really saving money, this is a big win. But it's especially as you scale and you become bigger, this number is okay to be at 2 to 3% because it can help you make sure that you don't have defaulted payments, things like that. I know in the sense of a cafe where you're swiping a credit card before you even get the product, it makes a lot of sense. But when we get into the next chapter where it's like APAR and you're having to collect bills from the companies that you're doing work with, then that being able to collect that amount up front and making sure that it's collected within the time frame that you're expecting it is a big deal. And if that means you have a little bit extra payment processing to make sure that you're getting payments in the bank, that's worth it to a business owner. This is how I see it, at least. So, okay, that was kind of it for our bonus um, section. I hope this was a little bit in terms of helping you understand how metrics are designed and how we can really take something like a report that we spent a bunch of hours on and then deduce some information from it. This is a This is one of the ways that I do it. I have several templates that I've kind of set up for myself that make it easy to put in a lot of this information and then be able to extrapolate some data. This exact thing where we're looking at how do we target our margin based on what we're trying to reach. This is something that I do for some of my clients that is really helpful, especially when they're in their first 2 to 3 years of starting a business and they're trying to really grow. It ensures that they're not overspending on certain things and they're keeping within their ideal end goal margins, right? Is they're reaching their end goal. Okay, so that's it for the bonus for now. Obviously, if you really wanted to, you could create some graphs from this. We could go even further over everything, but this is the end of the course, unfortunately. Again, please use the community. And again, thank you so much for actually going through all of the videos, watching it. If you made it to the end of some of these where I've kind of, taken a lot of time to explain things, I hope I've explained things in a holistic way that really makes sense to you. I know that word has been used a lot by me, but I think it is really important to understand the big picture so that all the little tidbits of details really make sense as you start to look at everything. So, again, please give me feedback in the community. Please reach out. I would love to hear what you guys think. And I really hope that this entire course was helpful to you. Thank you so much, and hope to see you in the next course or hope to see you in the Discord.